financials and wealth managers enjoying some good gains today and really so far this month. Is it a little bit of positioning ahead of the federal budget tonight, do you think, or what else is driving the gains?
I think there's numerous factors pushing these stocks higher at the moment. They have had a fantastic month. If you look across the 1 month period, the diversified financial sector's up 12%. That's 3 times the gain of the broader market, which has gained around 4%. And this sector is largely driven by Macquarie Group, which makes up about 43% of the market weighting in this sector. It's gained 20% over the past month. But we've also seen some pretty good performances across many of the other fund managers and diversified financials. Magellan Group up 20%, Perpetual up 11%. So there's plenty of gains across the sector at the moment. I think there are a few factors that have driven this performance over the past month. Probably the full year Macquarie Group result, which beat expectations, better market sentiment, better market conditions, as well as increasing net inflows into funds under management in these companies at the moment. If we have a look at Macquarie Group, they released a full year profit result which beat market expectations by around $30 million, and this really spurred some optimism throughout the diversified financial sector over the past month or so, as that they saw some good gains across all of their businesses. Well, if we have a look at the market conditions at the moment, the ASX 200 has now rallied about 31% since the June lows last year, and this is really pushing investors back into the market, and this is feeding into funds under management and net inflow of funds for the diversified financials and funds managers. If you have a look at some of the companies in particular, if you look at Perpetual of the March quarter, it saw its funds under management up $1.7 billion, which is up about 7%. Challenger Financial saw their March quarter funds under management up around 30% over the previous year and up around 8% on the previous quarter. So there's some good funds moving into this area at the moment. There's a lot of investors that don't want to miss out on the rally that's happening on the market at the moment. So I think a lot of these could well have further to run. Certainly Perpetual's looking very good at the moment, some strong gains over the past week.
Let's take a look at the retailers and consumer staples. They seem to be having a bit of an off session today, but particularly the likes of Premier Investments. It's actually down by about 3.5%. What's driving that?
Yeah, rough day for Premier Investments. As you mentioned, generally weaker day for the retailers today, but Premier Investments in particular, and I think what we're seeing here, there's no major company announcements. We're seeing some technical selling in this stock today. If we have a look at a 1 year chart for Premier Investments here, you can see a bit of a double top pattern has formed over the past month and a half or so, and this morning it actually opened below that key support neckline of $8.30, and since then really the stock just tumbled through the session this morning, and really it found support back at where it had seen resistance before, around that $8 mark. So what you do see on the chart sometimes is resistance turning into support. That's what we've seen there for Premier Investments. But I think fundamentally as well, this stock had a very good run recently and maybe had run a little bit too hard given the current conditions. I mean, the company's transition at the moment does appear to be underway quite well, but there are a few issues I think still facing this company, most notably the rising competition they're seeing, particularly from international brands like Topshop and Zara, which are direct competitors within their space. And we're only seeing tentative signs of a recovery within the retail spending space at the moment. So looking at Premier Investments on the chart here, you expect to see resistance again back up around this $8 level, but again support not down until around $7.50 where it was trading through February, March.
Just on the broader market today, Tim, we seem to be seeing a bit of consolidation above this 5,200 mark. Do you see us sustaining above this level, or is a little bit of a pullback coming, do you think?
Look, we are seeing some consolidation, both on US markets and on the Aussie market here. Certainly in the US has seen a very good run. 8 out of the last 9 trading days were higher. On the ASX here today, we're currently towards the top of the trading range, but it has been a very range-bound day. If we look at the market since 11 a.m, it's traded within an 8-point range. That's only about 0.15%. And again, it's the large caps that are leading the gains. If you have a look at the sectors, the ASX 50, the 50 largest cap stocks, that's leading the market up around 0.3%. And again, it's the small caps which are lagging, trading very flat or even lower in early trade this morning. And this has been a theme across this broader rally that we've been seeing. Year on year, the top 20, top 50 stocks have led this rally up around 25% over the last 1 year period. The small ordinaries index of small cap companies have actually lost 3% across this 1 year rally we've seen in the market. And the money really flowing into the large end of town, chasing that yield, chasing the defensive earnings, chasing the banks, etc. And this does pose a problem for the broader economy and also the employment market, because it's not large, mature companies like the banks that drive economic growth, that drive employment. It's small, growing companies that drive employment in the economy. And at the moment, all the equity capital is flowing into those large cap stocks. So really, the market at the moment, if it's going to continue, it looks like it's going to continue to be these large cap stocks which push the rally.